Yes, certainly there is still uncertainty about just when we're going to see a kind of 50 basis point cut, because that's why I think that there is this increased bets on a 25 basis point cut in September because of this. Of course, sticky inflation and concerns around it is far from new, and there is still this real cautiousness. It does look like unruly inflation is finally being tamed. But certainly there is this cautiousness ahead, and I expect that we will see a quarter of a percentage point cut in September, with this kind of wait and see mode continuing. But the very fact that unemployment has edged up surprisingly to 4.3% does mean that cuts are the direction of travel, and not surprising that a full percentage point cut is being priced in before the end of the year.
What about the Krosner sound that you were just listening to there, that monetary policy has an effect with the lag, so perhaps a bigger cut could do some good for the economy and the markets? Do you not agree?
Yeah, I mean, it could. This is why it's such a finely balanced decision. And this is why there is concern that actually the lag effect of high interest rates is going to suddenly come and hit the economy harder as we head towards the autumn. But what I'm sensing is that there will be a bit more cautiousness. We're getting cautiousness here in the UK as well, an expectation, and we've heard from policymakers at the Bank of England that we shouldn't consider the fight against inflation is over. We shouldn't be complacent about that. However, with the headline rate in the UK rising, but not by as much as expected due to the changes in energy bills, and actually core inflation falling back, and services inflation showing a much steeper drop than expected. It is certainly very encouraging, but there is still an expectation that rates will be actually kept on hold in September because of this cautiousness. And we are hearing that from policymakers in central banks, both in the UK, the ECB, and of course the Fed as well.
Right.